Good morning. It's Market Day Report. We're glad you're with us to start a Thursday. Market's been trading now for 17 minutes. What's happening with the corn market? Well, corn is again lower, higher for two straight sessions, and we're pulling back a little bit. But notice that March contract has a 5 in front of it, and though it's not earth-shaking to see a 5, it sure is kind of good for the soul, right? Well, we got up to $4.95 on that December, and right now we're trading about a nickel off of the high. $4.90 a bushel. It's down 3 1/4 cents. Now, this is also trade in front of next week's prospective plantings and quarterly grain stocks. On the quarterly grain stock side, we're looking for soybeans that May through September contract. That's what we call the old crop. And May is off 3 1/4, 1168.5. But when we're thinking of prospective plantings, then our focus moves to that November contract at 1147. It's down 3. Let's go to the wheat market now. Wheat's been higher for 2 straight sessions, but the July down 2, 606 3/4. For hard red, we're a half penny higher, 633.5. And then over to the cotton market, it's been higher 2 straight sessions, but down 6 points, 72.57. Let's go to Dodge City. EmpowerAg Trading and Brady Huck. All right, Brady, a lot of numbers there, but trying to just show the difference between that old crop and new crop and maybe where our focus will be. What's your focus right now?
Well, I like what you said there with corn having a 5 in front of it on the March contract and that being good for the soul. And I think if we got to see a 5 in front of that December contract, that would certainly be even better for the soul. So these markets, though, Tony, we're not really breaking into new ground right now. We're trading within a big range. We're up big one day, we're down big the next. Corn putting 2 days together here and then giving it back a little bit this morning. So we need a catalyst or something to break us out into a different territory. So energy markets led the way, and they continue to lead the way. The outside markets drive that day-to-day price action. Had an announcement yesterday about extension of E15 that provided a little bit of a lift. There's anticipation of an RVO announcement tomorrow and a Trump ag event at the White House that maybe that could drive some more headlines. But in this environment, Tony, headlines, they don't always age very well. They can change pretty quick, and if you anchor to one too strongly, you can look like a fool in hindsight. So you got to be careful trading the headlines right now. Well,
you kind of walked into that with what's happening in the energy markets, and Brent crude staying above that $100 level. WTI is pulled back a little bit. But will this continue to really drive what we're doing over on our row crop side?
I think so. I think everybody's watching the energy markets, watching the war in the Middle East, and that's the big story right now. So are we going to 120 plus on crude? Is there further escalation, or will the seas calm and will we settle back into a sub 100 or $80 barrel range? So that's the big question going forward. Then you've got weather and you've got headlines. We've got the prospective plantings report next week and the quarterly grain stocks report. A lot of eyes going to be looking on the USDA's acreage number, what gets printed there. Looking for 94 million acres of corn. The trade is. I don't know what they'll print, Tony, but going forward, I think a lot of pre-fertilizer work got done, and I'd anticipate a bigger than 94 million acre corn number next year.
And one other thing we've got to think about, it's pretty dry. And we learned our lesson, I think. You're a young guy, but many guys learn their lesson trying to irrigate through a drought. And, that's another thing. We may put it out there and never turn a pivot on. Would you agree?
Well, the fringe acres really carried a lot of the national corn yield last year. And if you're going to plant a big acreage again, you've got to have the weather to support. And we had great conditions, not perfect, not everywhere, but largely good conditions out there. And we've got a real issue with drought out here in the western corn belt, the southern plains. Keep an eye on drought, and we need something to change out here, Tony.
Yeah, absolutely. All right, Brady, hang on. We'll change over from row crops to livestock. There's a change coming right after this on Market Day Report. All right, let's change the conversation from row crops to livestock, and we are lower again for live cattle. Starting the trade down a quarter, 25 cents, 234.17, and the June down 32 at 233.52. Feeders were lower yesterday, and well, we're still lower. The March contract, I think you can really kind of look past that at this point. It's set to expire next week. So April really is the most active at 353.20. It's down 15, and the hogs, after being higher yesterday, in mixed territory. Those summer contracts are seeing some gains, but again, just marginal at this point. Brady Huck's with EmpowerAg Trading in Dodge City, and about 30 minutes ago, Brady, Brian Hoops and I talking about Choice Select spread. Did that catch your eye as well?
That did. That was an interesting print, and I'm glad you point that out. Yeah, I think they're calling that a bit of a backlog in choice boxes that led to that inversion in the Choice Select cutout. But we'll see if it continues going forward. I'm going to guess that that's a bit of an anomaly, as you know, we all love choice cutout and choice beef. So interesting print, though, yesterday.
Yeah, again, prime is here. We hear prime rib. Well, prime is kind of the top here. You come down to choice, and then you have select, and then obviously we've got the others that we don't really talk about much. But could it also just be a fact that we're doing such a better job raising choice grades rather than select, so it's just a supply demand?
I think so. Yeah, you've got 88% of the entire beef box cutout is grading choice or better, choice or prime. So you've got a lot of choice and prime beef out there, and a lot of that, is genetics. Coming from producers' investment in genetics, but it's also management too. We're taking these animals bigger, and that gives them more time to pack that intermuscular fat into that cutout of meat, and they grade better. They simply grade better because they're on feed longer. So, yeah. A lot going on there.
Okay, final thoughts before we let you go here. Is there a market that we haven't talked about that you've got on your mind as we try to finish up this week?
Well, I think you got to watch the stock market, and you got to continue to watch headlines. Unfortunately, we're just trading those. Leverage at the feed yard is one of the biggest things that's hurting the cattle feeder right now. But we've also got those headlines out there. So watch the stock market. It's cattle are kind of a proxy of stocks, and if we can get some stability out there in the headlines and in the macro world, maybe we'll get to green grass and grilling season that could be that catalyst to provide us another leg higher in the cattle market.
There you go. Looking for green grass. Brady Huck, and Brady's with EmpowerAg Trading